So one of the themes that you've been talking about, Greg, is this distinction between formal and informal banking relationships. What do you mean by that?
Well, from a regulatory point of view, there's a much higher standard of information collection for what's called a formal bank account. And that usually requires a government ID, a whole bunch of checks, et cetera, whatnot. And what that's done is divided the world into haves and have-nots. So people that don't have those are excluded from the formal banking system because they don't have the information requirements. There's a whole other world out there that people still use financial services, but there are things like prepaid cards, gift cards, money orders, and they're still issued by banks. The money still sits at a bank. It's still FDIC insured, but the relationship is more informal. It doesn't necessarily mean the bank doesn't know anything about the customer, but it's not at the level. And the question is there one financial instrument that can work both for the formal population and use cases, but also the informal? We think there is. It's called USBC. It's a deposit token. It has the technology of a stable coin, but it has many of the information characteristics for compliance that are associated with more traditional bank products. And I think what we'd like to talk about is why one single product, USBC, can work both for use cases that are people that are getting on the first rung of the financial ladder, and also for people that are very sophisticated, very large on the traditional side of banking that includes correspondent banking and sending large amounts of money between countries for supply chain, et cetera. It can all be one token, but it operates on a sliding scale, and that's USBC, and it can do it compliantly and with good consumer protections.